Hello, everyone. I'm Kanishka Karkira, the Senior Executive Producer at Transformance Forums, and welcome to the Supply Chain and Trade Finance Unfiltered series. In today's episode, Inside the Evolution of Supply Chain and Trade Finance, we are joined by Ms. Megha Kaushik, Head of Supply Chain at Patanjali Foods. Hi, Ms. Megha. It's great to have you with us.
Thank you, Kanishka. Thank you with this honor for having me on your podcast.
Before we get into the conversation, could you briefly introduce yourself to our audience and walk us through your journey at Patanjali Foods?
Well, to begin with, it's not a much history that I'm having. So I started off my career from the banking fraternity. So I would say I was at the other side of the table of the supply chain finance domain. From there, the banking gave me the perspective of how to evaluate liquidity, the understanding of credit, risk, evolution, everything. And from there was, I would say, a paradigm shift in my career when I joined an FMCG company, that's Patanjali Foods. So almost it's going to be, by grace of God, a decadal experience in Patanjali Foods for me right now. So here I'm again on the other side of the table. Now it's, not just, thinking from the perspective of lending. It's about orchestrating the entire liquidity of the company, managing the cash flows, reducing the DSOs, increasing the DPO so that I can optimize my working capital. So my entire domain has now structured around working capital optimization, just in three words, using the supply chain finance and the trade finance categories.
Thank you for sharing that. So, before we get into the specifics, what has fundamentally changed in the way you think about supply chain and trade finance over the last few years?
There is a paradigm shift, I would say that. Initially, supply chain finance used to be just thought of a mere transaction thing, that there used to be a channel partner who wanted some lending or funding thing, and that the banks or the NBFC used to support. Now, over the years, it has changed so dramatically that your entire working capital is now shifted towards this transaction banking arrangement. So instead of viewing it just, having a funding for, buying your inventory or paying out your other payment stuff, it is being considered as an essential part of your working capital, wherein your CC, that is a cash credit or the erstwhile, traditional kind of products in the banking fraternity or maybe the NBFC fraternity have reduced their exposures, and all these transaction banking stuff has emerged as the game changer. Now, the beauty of this particular aspect is that each and every transaction is digitalized. You can monitor them. There is a less, you can say that misuse of funds that with erstwhile traditional products at times it was being associated. So it has been a completely game changer. And with the current scenario, with the kind of black swan events we guys are having, with the kind of, geopolitical scenarios we guys are facing, these are the products in supply chain and trade finance that have gained tremendous popularity. And now people are understanding the essence of having an arbitrage in their system from which they can actually gain their P&L. So this is the beauty. From a traditional shift of just funding to the digitization component of working capital.
That's quite a meaningful change you've highlighted. And that leads me to my next question. In a larger supplier ecosystem, how do you strike the right balance between expanding liquidity access and maintaining disciplined risk frameworks?
This requires a lot of support and a lot of due diligence as well as mandatory frameworks. It's not that today if I end up deciding that I need to manage my liquidity through having some checks on my DSOs and DPOs, and say after a month when things are getting into shape, then I decide, okay, now I can ease out to something. No, it is a continuous discipline with lot of statistical tools being utilized for the predictive analysis, and amalgamation of that with proper discipline would ensure your expansion in liquidity and cash flow so that the resilience on the outside funding is reduced and the resilience and dependence on your internal funding is more being propagated in the system.
Fair point. Very well explained. There's a lot of conversation happening around digitization. Where do you think companies are getting it wrong when it comes to building a truly effective supply chain programs?
The one thing that people often, dwell on and that doesn't function properly is considering supply chain finance solutions in isolation. So what happens is companies, they tend to, deploy one tool for having funding for their forward linkages, that is the distribution channel, and then they tend to forget they do not deploy anything for their vendor payments. So my honest submission after, working in this particular domain for almost near 2 decades is that never ever deploy a solution in isolation. If you want to actually orchestrate your entire supply chain, digitize it with a lot of discipline and data hygiene, then you need to take a holistic view. So if today I talk about, reducing my DSOs, I need to work upon increasing my DPO. So as my balance sheet, gets truly, I won't say self-funded in nature, and there is a reduced dependence on the traditional products which are there in the erstwhile banking fraternity, like cash credit and all those products. And plus digitization, you need to have the use of AI, ML, along with the predictive analysis, which is again a very sophisticated part. So, considering Indian economy being, bifurcated into organized and unorganized segment, still the large part is unorganized. Getting them into these kind of sophisticated and mature products is itself a kind of a tedious task. But gradually people are understanding the importance of having this arbitrage model in their system. So now people are moving towards all these transaction-based products rather than moving towards completely traditional mode of finance.
I like the way you put that across. That really highlights the difference between digitization and transformation. So, Ms. Megha, as we look ahead, one final question. As supply chain becomes more data driven and interconnected, what will define the next phase of supply chain and trade finance?
The next phase would define wherein the companies would actually be moving towards the complete AI module of the digitization, wherein the predictive analysis is given a lot of importance and your ML is being introduced, but that will take a huge time because still, if you talk about India, we are having a huge chunk of unorganized segment also in our economy. So having that particular stuff, that particular sophisticated, mature stuff orchestrated in unorganized segment would take a lot of time. So for that, I won't say it would take a decadal time or something because people have now realized the essence of why transaction banking is much more better than having a traditional banking. Even in my chain also, even in my channel partners also, they have now understood the importance of having arbitrage model in their system, how the rotation would reduce the interest rate aspect on them. So gradually it will take time, but we need to have a lot of patience and plus we need to move on with the data and with a lot of discipline.
That's a seasoned perspective and it really reflects in your approach. Thank you, Ms. Megha, for sharing your valuable insights with all of us. It was a pleasure having you on the conversation. Thank you very much.
Same here, Kanishka. Thank you so much.
Thank you very much. To know more what's shaping the supply chain and trade finance space, don't miss out on the second edition of the Great Indian Supply Chain and Trade Finance Summit in Mumbai. To know more, stay tuned.